Good afternoon, everybody, and welcome back. Cyber Trading University presents our Closing Bell webinar. Now, for those of you that do not know me, my name is Josh Levitan, one of Fausto's day trading instructors here with CTU. Let me get a quick sound check first so I know everybody can hear us loud and clear. Perfect. Sherry, Steven, Abe, Ted, Posey. Ted, new student here at CTU. Great to see you, Ted. Al, Steven, John. Great to see everybody as well. Lauren, perfect. All right, guys. Well, I had mentioned in our trade room that we have a fantastic webinar here with us today. Obviously, we have a lot of guests that come and present on CT's platform, but none like our presenter today. We have a great friend of not just Fausto and CTU, but one of our own, a skilled day trader himself, Hubert Centers from HubertCenters.com or from Hubert Centers Company or TradeTheMarkets.com. So, what Hubert will be presenting with us today is exactly his title, My Secret Weapon for Finding Better Trades. So essentially, what Hubert will be showing you guys is essentially how to know the prevailing stock trend instantly on any chart, how to identify a trend change without second guessing yourself, and essentially knowing when it's time to sell to avoid any downfalls, to cut your losses, or just to take your profits. So essentially what Hubert has been doing over his 10 plus or for over his 20 plus years in terms of the trading market. He has been a skilled day trader, much like Fausto and CTU. He has a no BS approach. He tells it exactly how it is, which is exactly what we need to hear as traders. A nice, refreshing, entertaining approach. So, like I had said, Hubert currently owns HubertCenters.com. He's currently the co-founder of TradeTheMarkets.com. Been featured on Bloomberg, CNN, CNBC, Stocks and Commodities, you name it. So, Hubert, are you there?
I'm here. I am here.
All right, perfect. The floor is all yours, Hubert.
Thank you, sir. Thank you very much. All right, so let me grab this, guys. I'll make sure I've got everything hitting on all cylinders here. If you can hear me, just let me know you can hear me in the chat box, and then I'm going to grab my screen here and then start the webinar presentation. Sometimes these webinar platforms and I don't get along, so it all just depends on the situation here. Hold on just a second there. All right, cool. Now you should see a big welcome sign that has a big blue eye. Does everybody see that on your screen? Hold on, my screen is going to flicker here, and then it's going to happen here. It did earlier today anyway. There we go. All right. Does everybody type in blue if you see a big blue eye in the screen there for me? That way I'll know that we are all looking at the same stuff. All right. Let me scroll down here. I think I'm almost ready. I just have to get the scroll message down here so I can read y'all's messages. They're coming in backwards. Aha! There we go. All right, perfect. All right, so let's get started here. Welcome. Oh, cancel that. Welcome to this webinar. Before I get started, I have to make sure that y'all understand the warning disclaimer. Way too large that blue eye is, right? There's a minimize button somewhere where you can scale it down. So warning, danger, danger, Will Robinson. You're probably going to lose all, if not most of your money trying to learn how to trade, right? And you're sitting there going, daggone it, that you're going to teach me something. I am registered. I am a registered Series 3 and a registered Series 30. So I have to, number one, I would do it anyway, but I have to be super, super careful what I tell you cannot do. And most of you are going to lose your money. And most of you are going to take a little beating in the market. Market's going to beat you up a little bit, and you may blow up as many as three accounts before you figure out how to do this. So it is very important that you understand. And I got to do one more thing here because my software is not set up the way it should be here. I've got one of these little tools that draws on the screen, and it's set up to draw on all of my screens, and I only need it set up to draw on a portion of the screen. So let me map that real quick, and then we shall get down to the business of learning how to trade better. All right, cool. There we go. All right, now I'm back to the PowerPoint. There we go. All right, so danger, you're probably going to lose most of your money, if not all of it, trying to learn how to trade. Make sure that you read CFTC Rule 4.41, very, very important. I am a registered representative. I'm a registered Series 3 and 30, which just means I took a couple of tests, got a 70% or higher on them. And a lot of people ask me, like, why are you registered if you're a professional trader? Well, I own a futures IB, which basically means I can clear my own trades. I can clear other people's trades. I just choose not to. And that lowers my basis of cost on my commissions, my round turns. So if you're used to trading futures or stocks, and let's say you pay $5 a round turn, I pay nowhere near that. I pay less than $1 because I own my own futures IB. Plus, I either own outright or I lease seats on the exchanges that I trade on. So I'm a professional trader. And here's the thing about professional traders: if you want to lease these seats or own these seats, you can do it too. It's not that expensive. If you want to own a brokerage firm, it's a little bit more expensive. You have to put up like $60,000. You can never touch it and it just sits there. So that's a little bit more expensive, but that's why I'm registered. And since I'm registered, I'm held to a higher standard. So I have to make sure that I scare you to death about trading. Hypothetical or simulated performance results have certain limitations. Never trade with more money than you can afford to lose. Does everybody understand the disclaimer? And I like to take it a step further and go, your trading career will probably end up like a bad country song in reverse. Your wife is going to leave you, probably for your best friend. Your dog is going to die because there are no cats in country songs. They're going to repossess your Ford or Chevy pickup truck, and they're also going to foreclose on your single or your double wide trailer. If everybody understands what you're signing up for and what you're getting into, just type in yes. So if the CFTC ever audits this, they'll be like, well, he did try to scare him off about this trading thing, and he told him how risky it was. All right, cool. So that's where I'm coming from. Make sure that you know what you're doing. Even if you know what you're doing, you can still lose a lot of money. My name is Hubert Centers, and I'm known in the industry as having a no BS approach to trading and investing. So what I'm going to do is I'm going to share with you one of the things that I use to scan the markets for better trade setups. All right. Now, does that mean they're all going to work out? Lord, no. It's going to increase my odds or my percentages of working out. But a lot of my trade setups on some of my better trade setups, they don't work nowhere near like 80 or 70%. Some of my best trade setups work only like 40% of the time. It's the amount of money that I make when I'm right, as opposed to the amount of money that I lose when I'm wrong, which is the important aspect. Which I think a lot of retail traders forget that aspect. They're just like, no, I want something that works 80% of the time. No, you don't. You want something that works, that makes you more money, than loses you less money, and it could be right or wrong less than 50% of the time. All right. So when I grew up in the hills of eastern Kentucky in the coal mines, and there were a couple things that I could have done when I was a kid. Actually, there were about 4 or 5 things. So I could have been a teacher, which I did not look forward to. Could have been a factory worker at American Standard. That's where my mother and father worked all their lives, was at American Standard factory. My dad was the maintenance manager. My mom worked on the factory floor and then became an executive there. But I didn't like that work environment, so I didn't want to do that. I could have been a coal miner, which I didn't like the risk of either getting shocked, drowned, or a cave-in, or dying of black lung. And then also in Eastern Kentucky, these are our 2 biggest industries in Eastern Kentucky. The meth business, if you've ever seen Breaking Bad, could have went into that business. Or the weed business, which is almost legal in some states now, right? The marijuana, could have done that. None of these 3 had the risk to reward that I was looking for, because I knew if I would do one of them, I would try to be one of the best at them, and that would land me in the federal pen in an orange jumpsuit, struggling next to Bubba on who gets the top bunk and who gets the bottom bunk. So I decided not to do that. And at the age of about 17, I decided, like 17 or 18, I decided to leave the house, leave Eastern Kentucky, and I started on my journey, and I ended on my journey, and I wanted to find out what other successful, wealthy, driven individuals do. So what I figured out is there were a couple things that all of them did. They did these 3 things. I was like, all right, I gotta get good at these things. They had real estate that they invested in. All right, real estate. They had trading and or investing, and they also had other businesses. Now they had a combination of these 3. Now, most of them did all 3. Some of them did one better than they did the other 2, but they had a combination of real estate, trading, investing, and business. Today, I'm going to talk to you about trading and investing. All right. So, has it started? Had trouble with this AM? Nope. Yep. We've started. Now, when I left, I ended up doing some work for other individuals, and they would show me what they were doing. Okay. Now I have figured out how to do that and how to make several $100,000 a year or several $1 million a year, depending on what the business is. And I'm going to share with you how I find my trades to swing trade and day trade. All right. Now, I'm a member of a couple of different masterminds where it costs about $25,000 a year to be a member of, and we have some really successful people that come in and give us advice and mentor us, and then we also mentor other people in that mastermind and stuff like that. And here's some of those pictures. This is a picture of me and Paula Abdul. She's about 6 inches shorter than that because at that office she's got 6-inch heels on. This is Sir Richard Branson. He has more hair than I do. I've got more chins than he does in this photo, which probably means I'm going to die of a massive heart attack, and he'll probably live to be 120. This is Mr. Wonderful. No, I can't get you on the show, so please don't ask. You would still have to apply. And then this is Dave Ramsey. This was at one of Dave's Christmas events, and Dave and my company do business together. I am this guy in this picture. I do not have this monkey suit on. Thank God there's not a suit and tie there. I think this was for Futures Truth magazine or Commodities and Stocks or some magazine shoot I had to do. I am sitting in front of these 6 24-inch LCD machines or LCD screens. I'm in front of this broadcast quality microphone. I have a hat on. I have a t-shirt on, a pair of jeans, and a pair of tennis shoes. I am not dressed like that. Now, I don't show you any of this or tell you any of this to impress you. I do it to impress upon you. If a big fat redneck from Kentucky can do this, I think you got a shot too. So that's the reason I do that. Now, I always vowed that I always watched a lot of Ghost of Mr. Chicken, Scooby-Doo, and Batman when I was a kid, and I was like, man, I love the concept of those secret doors. If I ever, quote-unquote, make enough money, I'm going to build a big house on a hill, and I'm going to have the secret passageways in my house. So in my office, what you do is the upstairs of my house is all residence, and then the downstairs is mainly all business. You walk downstairs, and there's this bookcase, and you click this button and pull this book, and it opens up into a 1,500 square foot private office where me and my team work at. And I've got a couple of these doors strategically placed throughout the house that lead to secret areas and stuff. And I know it's stupid and immature and juvenile, and I don't care. It's kind of cool. I kind of like it. If you're interested in getting those doors, they're not that expensive. You can get them for like $600 to $800 out of a company out of Austin, Texas. So congratulations. You are in the right place at the right time, and here's why. I'm going to show you how to take your trading to the next level. In my opinion, I think this can help you find way better trades. So obviously the first question you're going to ask is, okay, what's this work on? Well, this works on stocks, options, futures, forex, bonds, and it also works on gold and other commodities. So if you trade any of those, you're probably going to be in good shape. So let me show you some of the back testing of this strategy. Now, before we get any deep, I gotta warn you, this is going to be a little bit different, but in a good way. I'm not your everyday or ordinary webinar giver, right? I will give you the opportunity to invest in a program at the end of this webinar. No surprise there, right? That's how all webinars are kind of ran. But I'm not here to sell you an indicator. I'm here to show you how to properly use an indicator that you probably already have on your platform. And if you don't, you probably need to shift and change platforms. But this will be a little bit different. It is going to be fun. I like to cut up and have fun, and if you want to cut up and have fun with me along the way, I'm cool with it. I've got a relatively thick skin coming from Eastern Kentucky, and I can give it just as well as I take it. So we can mess around with each other a little bit here. All right, so these are the S&P 500 results over the last 5 years. This is the back testing. On the stocks in the index, out of 500 stocks, it worked really good on about 430 of them, which is not too bad, right? Like, it's not going to work on everything 100% of the time, but it had about an 86% hit rate on 500 of those stocks. It worked on 430. That's not too bad. So it's robust, right? Now, if you took every signal, in other words, if it fired off a long, you would have went long, or a short, and then a long, and then a long, and a long, and a short, your return would have been 33%, okay? Which that's not bad. But I'm going to show you a simple little hack, a little trick that you can do to increase your return from 33% to 79%. And it's very easy. We're going to remove the counter trend signals, and we're going to apply a 3-bar confirmation. Now, what does that mean? It's not complicated. All that means is if we have a massive uptrend like this right here, we're going to mainly focus on buying the dips or buying the breakouts, buying the dips or buying the breakouts. But we're not going to short the tops and then cover at the lows. You can do it sometimes, but if it's mainly designed to be a good trend trading system, not a counter trend trading system. Although it's a decent counter trend trading system, you just have to figure out, like, what type of trader are you? Are you a trend trader or a counter trend trader? For me, 80% of the time I'm a trend trader. About 20% of the time I'm like, all right, it's running out of gas, kind of like the S&P did today and yesterday. Kind of time to short a few things, but don't get too crazy with it, right? So we'll talk about that. And then if you trade currencies or forex, it's been profitable on 29 currencies over the last 10 years using a daily, an hourly, and a 10-minute time frame. So those are my favorite multi-time frame analysis: a daily, an hourly, and a 10-minute time frame. So time frame selection, this is going to be the most important slide. Does everybody see a slide that says time frame selection on the webinar software here? Just type in yes if you see time frame selection, because this is really important. This is really going to depend on how you're going to trade this thing, okay? So if I'm looking at a daily chart right here, I'm just going to put a circle around daily chart. Then I know the time horizon for this trade is going to be weeks. It's going to be at least 2 weeks, maybe more, all right? And the chart is going to extend to the side. The cloud is going to extend for 1 month or 20 to 30 days or bars, all right? So that's the time frame for that. If I'm looking at an hourly chart, then I'm probably going to be in that trade time horizon for days, so more than 1 day. So 2 would be 2 days. So it's going to be 2 days or more. And the cloud is going to extend a minimum of 3 days to the right. And then if I'm looking at a 10-minute time frame, I know I'm going to be in this trade for hours, at least 2 hours, and the chart is going to extend to the right of the screen 4 hours. Does that make sense? So if you're going to trade options and you look at a daily chart, well, that's going to be a monthly options trade. If you're looking at an hourly chart, that's going to be a weekly option, okay? Same thing if you're going to do a swing trade, I would do a daily chart or an hourly chart. If I'm going to do a day trade, I would look at an hourly or a daily as my anchor chart and then go off the 10-minute signal, all right? Makes sense? All right, so this is what you want. This has been the #1 technique used in Japan for 7 years in a row. There's been this #1 best-selling book in Japanese about this technical analysis technique. And if you've ever tried to translate anything from Japanese to English, it is kind of a pain in the butt and can get expensive. It's designed so that you're going to know exactly what's happening in seconds. So it's called Ichimoku, okay? And it's one of the first things that I look at when I'm doing any type of trading, because it'll allow me to scan for things that are in a new uptrend or a new downtrend, which is very, very important. So Ichimoku means at a glance, and it's designed to filter out trends and signals, and it's designed to produce very clear signals. But it is a little complicated if you don't know what you're looking at. So it's kind of like looking at an x-ray without being taught how to look for the cracks in the bones on the x-ray. So this is the edge for you now. Now, how many of you in here use indicators to trade with? #1, the stuff that CyberTrader teaches you about reading tape is the best stuff that you can learn. That's how I was originally taught how to trade, is learning how to read tape and order flow. That's the #1 best thing you can always fall back to. Now, you also probably get introduced to other indicators like stochastic, MACD, RSI, a lot of that stuff. Now, most indicators work on past information. Some of them will give you the idea of what the current price action is doing right now, okay? And then very few indicators will tell you what's going to happen in the future. The cool thing about the Ichimoku indicator, it works in both the past, the present, and the future, okay? So it's the best of all 3 worlds. So let's dig in here and let me show you how this works so you can use it in your trading. And don't worry, if you don't have this indicator on your platform, there's a free website that you can use in order to find these trades, and it's absolutely free, and I'll show you that as we get into the material. So do you see a price action chart that says at ES, it's got some candlesticks on it, and it's got a little blue, it's called the cloud. Do you see the blue cloud going through your screen from the lower left to the upper right now? Does everybody see that? Yeah. Okay, all right, cool. So let's go through some concepts, all right? So #1, if the price action of what you're looking at is above this blue cloud, that is considered bullish, okay? If the price action is below the cloud, that is considered bearish, okay? Now, above the cloud is good, below the cloud is good too if you're short. Then what you're going to do is it's going to act like a real-time support and resistance, and it's going to act like a nice little fluffy cloud or a mini trampoline. In some cases, it's going to dig through the cloud and go test the lower ranges, and if it spins more than 1, 2, or 3 bars below that, then we can start thinking about shorting, okay? But if it just bounces here, bounces here, bounces here, and bounces here, so you can see out of 1, 2, 3, 4, 5, 6, 7, out of 7 signals, it only didn't work that one time, which it would have cost us some money, all right? That's not too bad. So does everybody understand the concept Above the price action is bullish, below the price action is bearish. And what this is telling us, this is giving us a future forecast going, the price action is going to go up, sideways to slightly higher, because the cloud is in the future blue, and it's got a nice little angle to the right-hand side here. If it sells off, it's going to sell off to the cloud and bounce off of there. If it goes below the cloud for more than 3 days, heads up, this entire trend will now be in a trend modification. It'll be changing from bullish to bearish. So that's our first thing. So everybody in the chat box, write down cloud. C-L-O-U-D. All right. That's your first term you got to know. So type in cloud. So I'll make sure everybody's paying attention. So we got Steve, Michelle, Lauren, Ted. All right. So at least you got it. There we go. All right, cool. All right. So that's the cloud. The next thing we're going to talk about is called the turning line. Okay. So write this down right here. T-U-R-N. And now the Japanese names are very hard to pronounce, and I would do them no justice. So we make up our own names. But this is the cloud, and then this is the turning line. The turning line is kind of like a moving average, only entirely different. A moving average is a moving average. These are midpoint averages. All right. So I'm going to show you how they're calculated. So you can see that sometimes this yellow line will get tested and it'll jump back above them. And then sometimes it gets breached and goes to the blue, right? So we've got cloud and we've got turning line. All right. So now everybody write down turn, T-U-R-N, in the chat box, because we're going to learn one more thing and then we're going to finish up with the last thing. So we've got the cloud, C-L-O-U-D. We have the turning line, T-U-R-N, and then this thing's called the standard line. I'm just going to abbreviate for STD, for standard line. Now, if you'll notice on the chart here, if the yellow gets breached, sometimes it'll just gently go below it here, and it'll bounce right back up. That's kind of what we want it to happen, because we're going to buy that yellow a lot. When the yellow does not hold well, it will go to the purple. The purple will usually bounce. If the purple does not bounce, it will probably go to the top of the blue. So in real time right now, if this was a live chart, and I'm going to do nothing but live charts at the end of this webinar going through this, okay? I'm going to teach you the theory first, and then I'm going to show you how to actually use it on a real live examples. If we break the yellow, then we may go to the purple. So our first line of defense is here. Second line of defense is here. So first, second. If we break the purple line, the standard line, we got a real good shot of it going to at least the top of the cloud. So these are real-time support and resistance areas that we can buy or sell. All right, so here's the last thing we need to know. So we got cloud, C-L-O-U-D. We have the turning line, the T-U-R-N. We have the standard line, and then we have the lagging line. And the lagging line is lagging on purpose. Most indicators are lagging not on purpose, just because most of them suck. But this is the past, P-A-S-T. This is what's happening right now. All right, that's the present. And this is what's going to happen in the future. So it's telling us if the yellow does not hold right now, it's got a decent shot of going to the purple. If the purple does not hold, it's going to work its way to the blue. But it's telling us that the overall uptrend is going to go sideways to slightly higher, because it has a future pacing indicator in here. And it's going, hey, overall, it's in an uptrend. Now, if this gets broken, and this gets broken, if we have 1, 2, or 3 closes below that, then we change our entire opinion of this market and we go, well, that wasn't a very strong uptrend, but now it's in a downtrend. And then we would short things on the anticipation of them going lower. All right. All right. So the turning line is a midpoint calculation where you take the high and the low of the last 9 days and you divide them by 2. The turning line is always the line that is closest to the price action. Okay. And here in this example, it's another charting package. This is called Up Data. I use those. And you can see this is a very old example of Apple. Don't let that scare you, because we're going to do all live charts at the end. And you can see Apple's in a massive uptrend here, and then it crosses below the cloud, massive short there, and then we've got all these squiggly lines. So let's learn how the turning line is calculated. The turning line is where you take today's price action, you count back 9 bars, so 9, 8, 7, 6, 5, 4, 3, 2, 1. You locate the low of that range. You locate the high of that range. The high was 465.75, and the low was 434.39. You're going to add these two creatures together, and then you're going to divide that by 2. And here's the math, because I got D's and D pluses in algebra in high school and college, so you don't have to be a math whiz to do this stuff. Also, the platform, the charting platform, will actually tell you what the math is. It's 450.07. Okay, so that number is 914 divided by 2, 450.07. Now, if we look at this, the price action was below the cloud. So it's bearish in nature. It came up to the cloud, bearish, it rolled back over. If it closes below the turning line, where's the next place it's probably going to go? Where's the next? If we break this 450.07, where's the next place that makes sense for us to go? Probably to the bottom of this cloud. If the bottom of the cloud doesn't hold, where are we going to go? That's right, back down to this green line, which is a standard line, and its calculation is over here to the right at 425.42. So I'm going to remove the chart so you can see that a little bit better. Okay, so there you go. We came from the underside of the cloud, which is bearish. We roll through here. If we break the red, close here, then we're going to go to 0.1. And if we close below there, we're going to go to 0.2. All right. So that's the turning line. The standard line is the midpoint of the high and the low of the last 26 sessions. Take the high and the low of the last 26 sessions, then you divide those by 2. That number is your midpoint. Okay. So here we got the turning line is always the one that's closest. The second one that's closest to the price action is the standard line, and it's calculated by taking today's price action, counting back 26 bars, locating the low and the high of that range, adding them up and divide them by 2, which comes to a calculation of 425.42. If we break this red, we're going to the bottom of the cloud. If we break the bottom of the cloud, we're going to that standard line. And then after that, we'll probably take out these lows. All right, cloud span A. Cloud span A is a midpoint of the turning line and the standard line shifted 26 bars forward. All right. So when we're looking at this, this is a massive downtrend. The cloud is red. We're below the cloud. And what we're doing is we're taking the turning line and the standard line and the midpoint, and then we're forward projecting in the future part of that, and it's going to be either the top or the bottom of the cloud. Turning line, standard line, midpoint, shift in the future, 26 bars. There's the cloud. Now, the other part of the cloud is called cloud span B. Midpoint of the high and the low of the last 52 sessions shifted. And what that's going to do is you're going to take today's price action, you're going to take 52 days back, the midpoint of that, and you're going to shift it in the future 26 bars. So that's the exact same thing. That's the part of the cloud, either the A or the B or the top or the bottom. All right, now the last thing is the lagging line, and it's lagging on purpose. The lagging line is the price line close shifted back 26 bars. So here's what the lagging line looks like. It's that little blue line. And what you're looking for here is you're taking the price action, you're shifting the price action back in the past 26 bars, in this case 26 days. And that blue line is always lagging on purpose so that it gives us a confirmation of what we're looking at. All right, so here's what the indicator, how it's pronounced and how it's spelled. It's called Ichimoku, and you spell it I-C-H-I-M-O-K-U, Ichimoku Cloud Chart Signals. The lagging line, these are some of the really good signals to take. When the lagging line crosses the cloud, that's a good signal. When the price crosses the cloud, also a really good signal. I get the best. Price and lagging line touching the cloud. When the clouds spans cross, when the clouds are changing colors, that's what that means. And the turning line and the crossing line. Now, this is a very fast signal. It's also inconsistent unless you're on the right side of the overall trend. Okay, and I'll show you how that looks here in just a minute. So let's go through some of my favorite trade setups. Okay, so this is the strongest, but it's also the slowest signal when you have this lagging line, this blue line crossing the cloud. So Apple is in this massive uptrend here, and then we get a cross when the lagging line crosses the cloud. Now remember, how many days lagging is that? It's 26. So you won't be shorting it right here. You'll be shorting it right here, about 26 days late, okay? You would be shorting it here, and then you wouldn't cover until the lagging line went back above that cloud. So you'd be shorting it around 570, 580, and then by the time the blue line went above the cloud, then this price action here would probably be around, let's just say 510, okay? Let's just say 510. So not too bad from 510 or 580 to 570 down to 510, but it leaves a lot to be desired, right? It leaves a lot of meat on the bone. Now, you're never going to be able to get the dead high, and you're never going to be able to get the dead low. So don't try, because I've been trading for 25 years, and I'm not saying it's possible. It's just highly unlikely that that'll happen. I think I've done it maybe 6 times in my life, and I've been trading for 25 years, all right? So the best thing is just to follow your plan. So that's a very strong signal, but it's also very slow. So this is the Goldilocks setup. It's just perfect in my opinion. It's one of my favorite trade setups that I like to use with Ichimoku. It's when the price action crosses below the cloud 1, 2, or 3 days. And here's how I grade those. 1 would be aggressive. 2 would be moderate. 3 would be conservative. And another setup is if I can get the lagging line to confirm on any of these, I'll also take that. So sometimes you'll see on 1 bar above the cloud, the lagging line will already be there. Sometimes it'll take 15 bars to be above the cloud before the lagging line gets there. But in this case scenario, if we're waiting for 1, 2, or 3 different closes above the cloud here, right here, like this, 3 closes, then we would short it here and we would cover it there. That's a better trade in my opinion. You leave way less meat on the bone. You get most of that, right? You get the meat in the middle, and that's one of my favorite trades, and that's what I'm going to teach you how to do today. There are some counter trend trades when the lagging line touches the cloud or when the price touches the cloud, and then there's also crisscross trades. So if you've got the turning and the standard line crossing, if the green and the yellow cross, kind of like a moving average cross, you could do those. I don't recommend that you do this top one up here. What I would do is I would wait until the price action crossed below the cloud, and then it crissed once, and then crossed back again. I think there was a couple kids that made some kind of weird song, crisscross or something like that, back in the 90s. But that's a good short signal. Here's a criss, there's a cross, here is a criss, and there is a cross. Those are the ones I would do. Just be careful. They're smaller time frames, they're quicker, therefore they're going to give you more false positives. All right. So here are bullish signals. Price above the cloud is bullish. Prices in the cloud are bullish if they come from the bullish side. The lagging line crossing the cloud is the main signal of trend change. Price crossing the cloud is a early but less reliable warning of trend change. And price and the lagging line will often find support at the cloud's edges. Cloud spans crossing from red to green or green to blue or green to red, depending on the color, can also signify a trend change. Be on the lookout for thick clouds after a run, which could mean that you're about to get a trend change because it's going to go from thick to thin, and they're easier to cross. Now, I'm going to put this slide over here of the bearish signals. I'm going to take a quick drink of water while you read those really quick, and then I believe we are going to move on to the trade setups on live charts. I believe that's what's going to happen next. So read this slide real quick while I get a quick drink of water. Okay, everybody good? Give me an okay when you're done reading that real quick. They're the exact opposite of the long setups, are all they are. Okay, all right, cool. All right, so let's move on here. We've already talked about the back test results. We've already talked about that. Give me a chance to get back up here where I need to be. All right, bearish signals, okay. We already talked about the back testing. That's good, so we don't have to go over that again. Okay, we talked about how profitable it is on time frame selection. We talked about that. What else did we not? Oh, time frame analysis. My favorite are daily, hourly, and 10-minute. We talked about that. What else? Make sure I'm going to kill you with content here. All right, best stops to use. Very common question that I get asked. I like to use the parabolic SAR. If you suck at trailing stops, or if you stay in trades too long, or if you jump out too early, use the parabolic SAR. If you're long, use the bottom of the cloud. If you are short, use the top of the cloud. And now I believe I'm going to live charts. All right, so let's go to live chart setups. All right, some discard. Now you should see a shot of my trade station. Is that what you're looking at now? So let me show you something really cool. That'll save you a lot of time. Now, I don't know what charting platform you use, and I don't really care. Right? Just use a good one. And most of them are good. But TradeStation and TOS and some others have the ability, the function, in order to properly scan for this stuff in real time. So what I can do is I can load this up with a bunch of stocks. And let's say this is S&P 500, and I can just go and I can go double left click and go. Now you see right here where it says new below, new below, new below, new below. Type in new if you see that, if you see the new below. I also have new above, right? So what that's telling me is these are trades that are newly above or below the cloud, which is very important to me. So now this screen here is a different time frame than that one is. But in this case, you can see crude oil, right? And I can scan for that in real time, and it'll tell me, hey, these things are newly below the cloud, and these things are newly above the cloud. And it'll just filter those for me, which is really cool and a time saver, right? Now, in this example, let's go through before we do that, which is really cool. I'm going to show you a free way to do that too. Toss will also do that if you know how. We've got a video showing you how to do that. Let's go through all the markets really quick, okay? So I'm going to move my screen back here and show you how powerful this is. So let's go at ES. So at ES, would you say this is in an uptrend or a downtrend right now? What is this, up or downtrend? According to the rules, it's above the cloud. It's in an uptrend, but it closed below the turning line today. Therefore, it's in an uptrend, but it's about to retrace a little bit. It may go to the purple, right? But we're still in a valid uptrend, and the future projection of this is sideways to maybe slightly higher. So S&P, not a great trade. It's a decent short here with a stop of yesterday's high. Let's take a look at the YM. YM, a little bit better short trade, right? It's above the cloud. It closed below the yellow, therefore it may go to the purple. Now, if you're a trend trader, you're going to avoid this sell signal, and you're going to wait until you either hit the purple or the cloud in order to get long. So Dow, valid uptrend, pulling back, waiting to be a buyer there. Let's take a look at the Russell really quickly. So Russell sold off today, first day it's been sell-off. So you could buy the Russell with a tight stop loss on the anticipation it's going to bounce higher, or you wait till it sells off to 1150.75. Let's take a look at the NASDAQ here. NASDAQ, a little bit better. So you should have been a buyer of the NASDAQ right today. Massive uptrend above the cloud, sold off into the cloud, bounced off the turning line, and looks like it's going to go to 4,800. Let's take a look at the 30-year bond here. 30-year bond has been in a massive uptrend. Oh, look here. Broke the turning line, went to the standard line, and then bounced back up. But what did it do today? Today it closed back below those. So that tells us that if it broke the yellow and the purple, it's going to go to the top of the cloud, which means it's going to go somewhere in here, right? So I want to leave this alone until it gets there in order to buy that. Let's take a look at the 10-year note. 10-year note, same thing. Broke below the yellow and the turning, probably going to go to the top of the cloud. Let's take a look at gold real quick. Gold, look at there. That's a beautiful little trade there. So we've been long a little bit of gold. Anybody want to know why? We're above the cloud. We sold off to the turning line and then the standard line. Then we bounced back above the turning and the standard line. The standard line, we bounced off the standard line above the turning line. Long here, here, here. Looks good. Probably going to go to 1,400. Take a look at crude oil. So crude oil, we have been short for 1, 2, 3, 4, 5, 6, 7, 8 days. Anybody wonder why? Would I short bonds? I would short them intraday, David, but I probably wouldn't hold them for more than a couple days because they're still above the cloud. Because we broke below the cloud, we've been down 1, 2, 3 days. That's a good short for us. So then we short crude, and now right now we're right now on top of support. Now at the end of this webinar presentation, I'm going to give you the opportunity to give me some symbols, and I'll just look at all of your symbols and tell you whether they're in uptrends, downtrends, or if I think they're going higher or lower, or where they're going to have problems with. Okay. But does that make sense how easy that is to use? All right. And I'll do it at the end of the webinar. All right. So just save up your symbols for that. So let me show you how you can do this really easy with another piece of software that's free on the internet. So you don't have to just have TradeStation or TOS. So you go over to this website, stockcharts.com. I have no affiliation with this crew. I just know they have this tool. Okay. You go over here to stockcharts.com and you scroll down to the right. And you see where it says here, additional tools. I'm going to click on predefined scan results, and I'm going to hold down my control key. That's going to put another tab up here. All right. Now I'm going to zoom that in a little bit. All right. Now I'm going to scroll this down to where it says candlestick patterns. Then I'm going to scroll down to where it says Ichimoku patterns. There we go. There we go. And I'm going to say, I'm going to scan for moved above the cloud today or move below the cloud today. I'm going to hold down my control key and I'm going to go left click, left click. That's going to add these two little tabs up here to Chrome. And then I'm going to filter those based upon the exchange. Let me scroll this down just a little bit here. There we go. Let me scroll it down. Okay, all right. And then I'm going to do the same thing over here. I'm going to do it by exchange. All right. Now, what this is going to do is it's going to filter by the exchange. Is everybody following me so far? I know I'm moving kind of fast, but I don't want to waste a lot of your time. So now what I'm going to do here is now I've got ANGI moved above the cloud. Angie's List. Now, it's a little bit cheap. I don't know if I'd trade that one, but you might be BOJA. You also might want to look at Chewy's here, Chewy's. So let's take a look at Angie first. So all I'm going to do is I'm going to click on this little bar chart, the one on the lower, on the left-hand side. And then it's already got the chart set up as Angie's List. And then I'm going to scroll down here, all right? And I'm going to take the overlays, simple moving average. I'm going to remove that and just say, I only want to look at Ichimoku full. Simple moving averages, I just don't want to look at anything else. And then I'm going to go down here to the indicators. I'm going to say nothing. I need nothing. Make all of that no, none, and none ya. And then I'm going to hit update. Now, do you see where Angie's List as recently went above the cloud, and then it went into the cloud, and it closed back above it? So that would be a decent long signal, right? Let's go over here and see if we can find any more of these suckers that we have in here. So we can say Angie's List. Let's see if we got one that's a little bit more pricey. We could do Bojangles, B-O-J-A. So I'm going to be B-O-J-A. B-O-J-A. Boom. There you go. Bojangles crossed either above or below the cloud, right? All right, let's take a look at another one here. Chewy's. We've got, Coca-Cola bottling. Let's check out Coca-Cola. We've got Chewy's, C-H-U-Y. C-H-U-Y. Oh, man, hold on. I did it wrong. I messed this up here. There we go. C-H-U-Y. Little Chewy's. Aha, look, Chewy's sold off into the cloud, and it bounced out of the cloud. I like that. That's a decent little long. Let's see what else we got here. We've got, anybody else noticing? Oh, let's do Coke, C-O-K-E. Let's do Coca-Cola bottle, C-O-K-E. Boom. Oh, I like that. So it's been above the cloud. It tested the cloud again today and then bounced out of it. So nice little trade setup there. Now let's take a look at some of these shorts that we have. We could also filter for the shorts. I'm going to move this to the right-hand side there. And now these are all the things that's moved below the cloud. So we could do AMSF. AMSF. There's Ameritrade. A lot of people know those, so let's do those. Ameritrade. Let's do that one right there. AMTD. So we're going to go remove that symbol. AMTD. Ameritrade. Ooh, look at there. It was above. Now it's crossed back below the cloud. So Ameritrade's probably a decent short. See if we got any other. Anybody else notice ones that others? FANG. F-U-L-T. I'm trying to see if any of these are popular that would kind of resonate with you. Okay. Any other decent ones? There's ComScope. Let's do another little expensive one. FANG, F-A-N-G. Let's see where it comes out at. F-A-N-G. Oh, yeah, that's a beautiful looking short. Look at there. Beautiful short. It's been below 1, 2, 3, 4, 5 days and came back below today. So that's a good looking short. What are you looking at to pick these? I'm looking at stock charts, and I'm looking for when we cross either below the cloud or above the cloud. And I want it to be across either 1, 2, or 3 days cross below the cloud. But this scan that we set up here on stock charts is crossing, as you can see up here in the top, moved above the cloud. And this one says have moved below the cloud. And then all I'm doing is I'm charting them on this platform to show you that it's actually working properly. Everybody understand the concept? So what you can do is if you use TradeStation, you can just filter it like I do. If you use TOS, you can also filter it the way I do. And if you don't have either one of those, you can use stockcharts.com, and that will scanner for you too. It's a little bit more work, stock charts is, but it's free. It doesn't cost you anything. All right, so let's get back to the PowerPoint. I'm going to make you an opportunity so that you can invest in your trading education so that you can learn how to trade better. And then I'm going to spend the rest of the time going through your symbols. Sound like a fair shake? Sounds good to me. All right, so let me put the PowerPoint back up here, show you what you can do. So here are some success stories. The course was awesome. I've taken one bond trade and made over $900. Do you think I'm happy? I just entered the bond trade, shorted again, where I took profits earlier today after you made me greedy for possible further drops. I'm happy dancing. This is the first time I've had a successful trade during the course. I have the hardest head in the world. You couldn't have made it simpler, Mary. This is one from Greg. Thanks. You are likely the only reason I have kept at it with trading, and now that I'm profitable, I can't thank you enough. It was really great, and I can't wait to attend the gold trading class. Thank you so much for all you do. Here's one from Ron. Webinar series was a great experience, very informative and educational, lots of fun. But that's no surprise. All of your courses have been great learning opportunities and great values. So will you be one of our next success stories? We are inviting you to join us. Who is this not for? This is very important. You may not qualify. If you are a Holy Grail seeker, if you suffer from Holy Grail-itis, if you believe that there is just one way and there's a Holy Grail to beat the market, that is a fool's game and you should stop that stuff. That's craziness. All right. If you suffer from hopium, if you just got to trade because you got to trade because you got to make your mortgage payment this month, please, for the love of God, do not buy this course. I am not your I'm not your guru. I'm not going to be able to turn your $5,000 into $1 million by the end of August. It's just not going to happen. All right. If you're a guru surfer, if you follow me and Fausto and 2,900 other guys online, heads up, we're all going to disagree on something all the time because we're all going to be in different trades. So I'd pick one or two or max three people that you like to follow and kind of figure out what they're doing and copy and steal some of their stuff and make it your own. All right, if you can't make a decision, obviously the course is not for you. If you like to make things more complicated for no good reason, please, for the love of God, do not take this course, all right, because it will not be good for you. All right, who is this for? If you are serious about making real money in the markets, which hopefully you are, if you are looking for a proven system, which Ichimoku is, if you can follow a simple set of rules and directions, and if you know that your success is actually tied to you taking action, you may be a good fit for the course. All right. So here's a fraction of what you'll learn. Number one, in the course, it will be the number one best-selling Ichimoku course on the market. I'm going to share with you 7 of my proven setups. I'm going to share with you trading rules and indicator settings, checklist with cheat sheets with entries and exits. I'm going to give you the stop losses and the targets to use. I'm going to teach you how to scan the markets with Ichimoku, how to filter out the best trades to take so that you'll never guess what to do next. And I'm also going to show you how to avoid the dreaded head fakes, because if you don't know about which head fakes are head fakes, they can be troublesome. So I'll teach you one thing that is super important to avoid, and it's called a lagging line hook. So you got to be looking out for that thing. So if you don't know that thing, it'll probably rip your head off. All right. All right. You have absolutely zero risk. It is a 100% satisfaction guaranteed, no questions asked. If you do not love it, I do not want your money, period. I can't deal with the bad karma, and I got to be able to sleep at night. If you don't love it, please just ask for a refund, and we'll give you your money back. We always over-deliver here, period. Our goal is that you get 10 times return on your investment. And the refund rate on this course is very, very slow because we over-deliver, and it's a really good course, and it actually works. All right, so here's what you want to do. So the Ichimoku Cloud Charting Secrets courses retails for $197. And then I'm going to give you 1, 2, 3, 4 follow-up webinars of a value of $97, 1 per week in case you have any questions. And we're going to scan the markets live together at least once a week and pick our trades together. And then I'm also going to do 1 day of live trading. All right, so it's a total value of $682. Your special offer for today is $97. All you have to do is be one of the first 50 people. It looks like there's 116 people in here right now. So roughly you got about a 50-50 shot of getting the course, right? Deadline, first 50 people. You want to go to this URL, and you can do that by going to hubertcenters.com/clouding. I'm going to put this in the chat box. All right, there it is in the chat box. Everybody see it? That's pretty simple. You can also call our office. Patrick and Jared are here, ready to take your call at area code 859-963-3445. That's the telephone number, all right? So, any questions? Because I'm going to switch over here, and this is an easier way to do this, so I really don't have to sell this thing so much. Once people see how powerful it is, they just either want it or they don't. So what I'm going to do is I'm going to shrink this thing down here, put this up here, and then you can see that number and the link, and you can do what you need to do in order to invest in your education there. And what I'm going to do here is read your questions. Let me get right here where I need to go. There we go. All right, cool. All right, any questions on any buying or selling questions first? I'll tell you some frequently asked questions. It's $97 one-time fee. It is not a subscription. That's the number one question I get is a $97 one-time fee. It is not a subscription. All right. So does everybody see this link up here? It says hubertcenters.com/cloudy or call 859-963-3445. Does everybody see that? Yes. All right. So let's spend the rest of the time. You guys have the link if you want to be one of the 50, and if you want to learn how to use Ichimoku more effectively in your trading, you can go ahead and place that order, and I'm going to go through some symbols, all right? Can you show how to set up TradeStation? In the course, we show you how to set up in TradeStation. We show you how to set up on TOS, eSignal, Ninja. We show you how to set up on most popular platforms out there, yes. Sounds great. Sounds like a day trading and I'm still working. Can I do this aftermarket like do my spread trade? Yeah, Buck, it's really good for swing trades. Like I first and foremost always scan for daily crosses above or below the cloud like this. So I always start as a daily anchor trade. My daily chart is my anchor trade. And then I go to a 60-minute chart and then a 10-minute chart. So it's good for both. It's good for swing trades and or day trades. Does TOS let you scan for Ichimoku? Yes. And in the course, we have a video showing you exactly how to do it. Somebody asked me where crude's going. According to this, crude is going lower. It is a sell on the daily, the 60, and the 10-minute. Okay, Amazon, AMZN. Only thing I ask is just doing them in cap lock so I can read the symbol. So Amazon looks good with a stop of 751 and a target of 800. Okay, I'm going to move, and it looks pretty good. I'm going to do this on daily charts just because it's easier. So XRS, okay. XRS it's a longer term long. I would wait until it touched the cloud in order to buy it. On this one, you're going to have mixed signals on this one because on the daily, it's pulling back. And this is exactly how it's supposed to work. It broke the purple, it broke the turning and the standard. Now it's going to go to the cloud. And on the 60 and the 10-minute, it's a sell. It's probably going to bounce when it gets to the cloud. So I would wait for it to pull back a little bit further before I nibbled there. Let me see here. TEVA. Okay, TEVA is a long if it'll jump back above the cloud. Okay, it either needs to close above 52. It needs to close above 53 or above 54.20 with a tight stop loss and a target of 56. AMD, good looking long here today. I would get long today or tomorrow. The market's closed now, so you have to wait till tomorrow. With a stop of 591 and a target of $8. Okay. WDC, Western Digital, is a buy here at the cloud with a stop of 44 and a target of 54. HCA is a short with a stop of 77.94 and a target of $68. GILD is a short with a stop of 83.39 and a target of $75. NQ, I did NQ, but I'll do it again. At NQ, the NQ is a long with a new stop of 46.93 and a target of 4,800. NVDA, y'all are wearing the phones out. I hear Patrick and Jared both taking calls back here. NVIDIA is a long with a stop of 51.06 and a target of 65. AG is a long with a stop of 16.58 and a target of $25. Nokia is a little bit of a mess. I would stay away from Nokia because it's in the cloud. You either want to go long when it gets above the cloud or short when it gets below the cloud. So Nokia is a little bit of a mess. So just be careful on that one. Does earnings change the whole picture sometimes, meaning hard to predict direction prior to earnings? Oh, definitely does. Let's take GRMN, right? So Garmin was above the cloud, had good earnings, and still it's like running like a scalded dog, right? But if you do MCD, McDonald's, they crossed the cloud and then they missed earnings and then it went below. So yeah, you do have to be careful around earnings, but Lord of mercy, we all have to be careful around earnings because earnings is a crapshoot. You never know. They could beat and the street can hate them, or they could beat and the street could love them. So you just never know. So you do have to be careful around earnings. But other than that's really the only thing you have to worry with. Let me see here. NVDA was NVIDIA long. Hold on. I thought I already answered about doing NVDA. NVIDIA was along with a stop of 5106 and a target of about 70. Yes. What does MCD long term? MCD. Well, it's not that. So the shorter term on McDonald's is a short. If you want to do a long term, I'd have to go to like a weekly chart, which on a longer term, McDonald's is a long if you're an investor. But about the longest term I would go using this strategy would be a daily chart. But you can use the weekly and the monthlies. Yep. Okay. All right. If I've skipped your stock, please put it in again, one per line for me, and I'll do them one per line here. I'm going to start from the bottom there at tops. TOPS. All right. TOPS is penny stock. Be careful. That stuff is super sketchy. Most people get killed on these things. It's above the cloud. It's a long, but a lot of penny stocks are super manipulated. So be careful on penny stocks. But it's a better long than it is short. Probably goes to a $9 target. All right. TSLA, Tesla. Tesla is a cautionary long, 1, 2, 3, back above the cloud. As long as Tesla can stay above this 222, 223 area, it's a decent long. If it closes below that cloud, it's going to drop to 212. So Tesla is a long as it stays above that number. All right, UVXY. UVXY is on a death roll to zero. It is a short with a stop of around 34.21. It's probably going to go to $10. Looks like death warmed over. TXN, little Texas Instruments. Good looking long with a stop of 65.60 and a target of $75. PCLN. PCLN is a little bit of a pain here because it's sideways conundrum. It's a better long than it is short, but that's a lot of consolidation here, so be careful. Probably goes to 1400. The lagging line does not confirm Tesla. Yeah, TSLA. That's right. The lagging line has not. Well, it confirmed it a little bit, right? Slightly above there, and now ripped back below. So that's why I'm saying be careful with Tesla. Exactly. ITC. It's a good eye. Tesla. ITC here. Good long with a stop of 45.47. Target 48. Using the daily chart for what? Trading time, maybe a week. Daily charts are good for at least 2 weeks. But I use multiple. It's just too hard to teach you what I do in the span of an hour in order to use it properly with both the daily, the 60-minute, and the 10-minute. It's just too much to cover. So I just do all these on daily charts and cover that. It's just a little simpler, easy way to approach a webinar. Yeah. All right here. TSN. TSN is a good long with a stop of 72.69 and a target of $80. XLE. XLE is a brand new short. It is 2 bars below the cloud. I would wait for that third one, but it's a decent short right now. It's a moderate short with a stop of 66.90 and a target of $60. VXX, I'm sorry. VXX is a short with a stop of 13.88 and a target of $7. LGND, there we go. LGND is a long with a stop of 124.71 and a target of 160. So we are fastly approaching that 50 spots. I've had you here long enough. Let me just do a few more here. Here is your link once again. You go to hubertcenters.com/cloudy. You can also call area code 859-963-3443. All that information is right here so that you can do it, so I don't have to read it. Okay, AMZN. I'm going to do 3 more here. AMZN. Amazon is a long with a stop of 751.63 and a target of 800. TWOU. TWOU is a long with a stop of 3174 and a target of 39. And ONE, I already did tops, but I'll do it again. ONE, sideways. It's just stuck there. No advantage at all. It might go to 550, but it's just stuck. I just leave it alone. TOPS, tops, penny stock. Be careful. They're hugely manipulative. Manipulated. You're probably going to get your head handed to you. Be careful. It might go to $9, maybe $10, but just be careful, man. Penny stocks will kill you. CREE. CREE is a long with a stop of $25.93 and a target of $31. You got it. DRD. DRD is a good long with a stop of $8 and a target of 11. SPY is the same thing as the ES. SPY. SPY is a long with a stop of 208 and a target of 225, but it's about to adjust. It's going to start pulling back a little bit here. HL will be the last one to do here. And HL is a good long with a stop of 620 and a target of $8. That's it. That's all I've got for you guys. Appreciate you guys having me here. Good luck. Hope it helps. Here is your link one last time, and I look forward to seeing you on the class. The first class starts, oddly enough, in 30 minutes, where I'm doing the follow-up webinars. We do them Tuesdays at 6 p.m., so I'm going to go get ready for that. And if you bought the course, I will see you at 6 p.m. because you should get a notice. If you don't get this week's notice, you'll be on next week's notice, okay? But you should get this week's notice most of the time. And if you don't, I'll see you next Tuesday, all right? Good luck. Hope it helps, and I'll see you on the next one.